Okay, everybody, welcome to this evening's ACY Securities webinar, live Forex market review. If you're on our YouTube channel, I can't see the chat, but you're more than welcome to watch. Or I've given you the link so you can join the webinar. Just simply follow the link and register, and you'll be able to join us in the live webinar and ask questions. So before we get into it, please read through the risk disclaimer. Any questions, put them into the question box or the chat box. Got both open. All right, let's move along. I think everybody knows me, but my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at ACY Securities and full-time trader in the Forex market these days. Been trading now for more than 15 years. Mentoring clients more than 10. If you want to contact me about the education webinars at ACY, just send me an email, duncan.cooper@acy.com. Through the week, you can connect with me at our website. You'll find my analysis on the market news tab at acy.com or at the YouTube channel, ACY Securities Australia. And you can connect with me if you want to, personally, on Twitter and LinkedIn there. As well, through the week, you can connect with me in our Telegram channel. Just contact Nathan Bray. He will set you up with that. If you want to get my chart layouts, indicators, then he will organize that for you as well. So I'll put his details in the chat right now before we get into it. All right, so just put that into the chat. Now, first thing we'll do tonight is we will have a look at the news. Just get away from that. And let me just refresh that. So we do have a risk event coming out this evening, CPI data month on month, year-on-year core CPI data for the US. So if this doesn't come in on print, then I'm sure we will get a big movement one way or the other. So it's going to be very difficult to go through from now till 10:30 my time. So that's 3.5 hours away. It's going to be difficult to take a position ahead of this because this could be very risk averse to your trade. So I'm going to go through the charts and look at levels where the market may be respecting, where price might get to. And then you can use that information after the news. All right, at the moment, price has been actually through the London session has been moving down and then moving up. So it's moving one way than the other. So let's get into the charts. I'm going to use my charts without the MACD tonight. Just going to look at levels. And we'll start with the dollar index. Nothing much is changing on the dollar index. On the monthly chart here, we're having a month, well, I will say a month, but we haven't taken out the high of last month, but we're positive for the month. We're holding above this area of monthly resistance, now supports 111.31. So nothing's really changing. We're just heading towards potentially major high up here at 121. So on the weekly, we're actually putting in a further higher bottom this week, having a week up. Are we going to come up and take out the most recent high that we formed? So trends just remaining on the weekly and on the daily. We're obviously just pausing here, waiting for the data coming out. You know, the data tonight is going to show whether inflation is still increasing. Is it holding, or is it starting to turn over? All right, so that's what we'll find out tonight. All right, and the S&P 500, here's the monthly chart look. It's lower top to a further lower bottom at the moment. During the month, we have been positive within the range of last month. Still slightly positive for the month now, but we are underneath broken monthly support there. 36.33. So there's a monthly downtrend, there's a weekly downtrend here, and we could well be moving further down. I've got to go back to the monthly chart just to give you a roadmap. We've moved down. We've almost run to the 62. So are we longer term moving down to 127 extension, or at least coming down to challenge this level of monthly support at 33.96? So you can use that as a reference for roadmap. So we are below the support level now. Are we moving further down the chart? All right. Can't take out this low here at the moment. We're kind of holding here, waiting for the news events. But, you know, after the news events, can this remain below 36.33 for a further decline? All right. So what we're seeing is, in general terms, we are negative for the week. Dollar index is positive for the week. So that's what we're seeing. US dollar strength, general weakness in stock market. So I'm just going to start from the left and move through the pairs. Now, we may be in a little bit of rally mode in some of the pairs in terms of we've moved down. Are we rallying back up just to put in a further little lower top on the day chart? All right, nothing can move down forever on the day chart before having a little bit of a rally to put in a further lower top maybe. So this is my Aussie yen day chart, but on the monthly chart, the significant thing I'm seeing is this massive rejection of last month. All right, is this a turning point from this major range, 79% level up here? Okay. Well, if I see your comments coming in, I'll get to your comments a little bit later. So is last month's rejection going to continue for a move down to break the trend, change the trend and move below 90.51? Okay. Weekly, we put in a lower top last week, having a bit of a bounce down here on support on this weekly level of support here at 91.41. So on the daily at the moment, we are having 1 or 2 days up. One day up, we might have another day up today. So in a perfect world, it would be great if we just had a corrective move up to a 62 level. You know, can we come up to the 62 level, 93.30? We've got broken day support there at 93.06. Getting back up to say 93 failure would be ideal. We're at 92.31 at the moment. So whatever comes out in the news, if it's positive Aussie yen, initially, we could certainly get up to 93. All right, so that would be an area to watch. It's very difficult. The perfect scenario tonight is if we get some news that just helps price rally a bit to a level that you could look to construct a trade to trade down from. If the news is negative for the Aussie yen, it'll just move instantly, and then you can't just get in. So hopefully the market will behave in a fashion where it comes and respects a level that you could trade down with the trend. Now on the 4-hour chart, the February I've got drawn is from last week's high to the current low of this week. So 93.30 to 93.06. That would be a nice area to watch. All right. Has been for the last day struggling to really get above last week's low. However, at the moment we are a little bit above. So when the market does receive the news, we may see a little bit of spike up. We may then start to see failure at last week's low. So then constructing a trade down from last week's low might be an opportunity, but you'll just have to see where price is. Okay. It'd be nice if we did get a corrective measure up to the 62 level. So let's leave that on the 4-hour chart. All right, Aussie dollar daily. We are testing down here level of monthly support and weekly supports. That all comes from over here back in 2008. So we are getting some form of, minor support there at the moment. Trend is down, so it's just having a natural bounce on a level of support. Weekly trends. We had a week up last week just. but we rejected and we've traded down. So just a continued downtrend. It's just in a bit of a difficult spot there with support. You don't want to trade into support. So the daily here, be nice if we came back up, just to cycle back up to 63, 63. So broken day support, become resistance for a move down. Last week's high is there. Move it down to this week's low for our chart. So that's not really that deep a rally because the 62 or the 79% level are much higher up here. But last week's low is at 63.52. Broken day support 60.36. So depending on whether we can get a strong rally or a minor rally, the first level to watch for failure would be in here. Last week's low, 63.51, up to 63 broken day support. If we get a deeper rally, look at the 62.79% levels. Okay. As well, we're at 62.90. Yesterday, we couldn't really entertain moving too much above 63. So depending on what the news brings, you know, we may get a little bit above 63 and then just falter at 63 and want to turn around. So all depends what the news brings. Of course, if it's US dollar positive, this will just drop and you'll have no level to trade from. But we'll just have to wait and see what the market brings. All right. So a little bit of positivity leading into the news. All right, Euro yen is moving up at the moment, ahead of the news. So just want to look at the weekly chart on this pair. We had a very nasty rejection last week up here at the 144 level. We have traded down below that level. So at the moment, we're just kind of rallying back up inside last week. There's going to be a 62 or 79% level to monitor within that range. So what have we put in a significant lower top here to move longer term down? If I move to the day chart just to show you, we've had a movement down. We've had a rally back up to 79. So there's a bigger structure fib here. Put that to the side. Okay. And then we've got a smaller range here that we're moving back up inside, which I'll go down to the 4-hour chart to draw the fib on that. So that's that range there. We're just coming up to 62. Is the market just getting up to a high level, getting ready for the drop maybe today? All right. So are we getting ready to fail here? 62 level or 79 level for then putting in the lower top on the day chart to move further down. We've already broken last week's low. Are we going to be moving down below last week's low level again and finish below that level by the end of the week? Okay. That's how what I'm seeing structurally. Now the news could drag this all the way up the chart, back up to retest the 144 level. That would be a great level to watch over the next 24 hours if we're back up there for further failure. Okay, we could come up and create a double top up there. So let's just wait and see what the news brings. Euro dollar. All right, it's just holding down here at 97 at the moment. We may be having a day up today. Hasn't been doing too much this week. It's waiting for the news event. Now, any positive news could see this come up to 98.64. That's about 120 pips away. We could definitely get there today once the news comes out, or we could definitely come down and challenge monthly support at 95.99 and the low level of day support 95.36. But you know, trying to trade with a trend, the weekly trend is quite clearly down. Very negative rejection last week from weekly resistance. I'm just looking at this as a continual move down. But at the moment, we're a little bit stagnant, getting a bit of support at 97. So I'm going to put a fib like on the other pairs from last week's high down to the current low. 62 level, 98.72 is just beyond daily resistance at 98.64. So that would be a very logical level to watch for a rally to when the news comes out, if we can rally. Okay. Always got to be looking at selling rallies in the downtrend. So where's your logical level? Depending on what the news does, let's say it comes out on print and then it's a bit of a non-event, then we might just have a very minor rally to the high here, 97.74. We could just come to, this highlight today on the pound that there's a potential head and shoulder pattern forming. There could be a potential head and shoulder pattern forming here, in that price might just come back up to this area here. So you end up with a left shoulder here, a head and a right shoulder. So that's approximately 97.43. All right, so whilst I've highlighted that level, there could be a much smaller range that the market operates in after the news. We're almost at the 62 level. Do we come up to the 79 level? Do we just match the left shoulder area here before we turn around and move down with the general trend? All right. So just monitor. Pound yen. I've been trading this pair because it's just so volatile, but there was maybe the opportunity to trade down from 160.66 yesterday. Before then, the Bank of England came out and said, well, they didn't come out and say, the day before the Bank of England said they were going to end their bond purchasing on Friday. So that's why we had this very negative day down. And then there was something got posted saying that maybe they've been talking, having quiet talks about the fact that they might extend it beyond Friday. So I don't know whether that's true, because they've said publicly the day before that they're not. So that then sends the pound yen all the way back up. So at the moment, go to the weekly chart, this is potentially a lower top here. And then we've traded down. What we might be seeing on the day chart is that this is topped here for that top. That top's the top. I know this is a higher bottom, but are we coming up to put a lower top to move down? Well, you'll also have to monitor what price does. Move it to the 4-hour chart. From the high of last week, so we had a very negative rejection down last week. So is that rejection really going to continue? So on the 4-hour chart, if you draw a fib from last week's high to the current low, we are, like I just showed you on the Aussie yen, we're at 62% retracement almost. Depending on your risk profile, when you're looking at the pound yen or the Aussie, the euro yen, let me get my yens correct. The euro yen, I was just showing there 62% retracement. Depending on your risk profile and how much you're risking on a trade, if you're only risking a very minor percentage of your account, the euro yen's moving back to the 62% level. The pound yen here is moving back to 62% level. You can construct a very low risk position with the idea that this is turning to moving to the downside, and you don't really care about what the news is going to bring out because the risk on the trade is very low. And you set it up in mind that the dominant trend is going to remain and we're going to move down through the course of the week. So that is obviously a potential opportunity to trade that approach on the euro yen or the pound yen here, but at 62% levels. But with the news coming out, we could obviously hold here and then move down for a decline. Going with last week's rejection, then are we going to move down for a decline? So 127 extension. Do we come up? We could come up to the 79 level. We could come up and form a double top. All right, so 3 levels to watch: 62 level, the 79 level, and the 100 level. Where are we at once the news comes out? Okay. Pound dollar. All right, so we've had a failure. Let me put a fib in across the whole range of last month. We failed at the 79% level as it stands currently in the new month up here. And we're also having a positive day at the moment. We actually have been down for the day, but now we're positive for the day. Whilst this is all lower tops and bottoms, what we could do is we've moved down here. We could be coming up to put in a lower top to this top. We could be coming back up to 113.50 to fail, 114.09 to fail, or maybe we're not even going to get that high. We see yesterday's candle, which was not yesterday, but the day before. We kind of held at the 62 level of that major range to trade down on that positive half a day up, half a day down affair. So watch 118.86. That's the 62 level of that range. All right, on the 4 hour, earlier in the day, I was looking at the potential left shoulder here. Let me just color it in. It'll behave. So my left shoulder's there. Is this a head? And we are getting a fraction above the left shoulder area at the moment, but we could form a head and shoulders where we are slightly above that level. Are we going to hold the 79% level, or are we simply continuing up? So watch to see what the news does. If it's very US dollar negative, we could well see 113.50 today, then look to see whether that level holds. Don't forget the dominant trend on the pound dollar is most definitely down. We do have a slight risk factor with what is the Bank of England doing. However, the dominant trend is still down, so maybe we're just cycling up a bit at the moment to higher levels so that traders can look to sell to move the pair back down. All right, so something's driving price up at the moment outside of waiting for the news. Don't know whether anybody's had any information secretly released, but of course, maybe this is moving up because they're expecting the Bank of England to, say, okay, we're going to extend things on the bond front, and people are repositioning themselves. All right. All right, so after the news comes out, we may simply dip back below the 79 level here, start to see price move below the 1100 level. But at the moment, of course, we're moving back up within this trading day's big drop down. All right, we may not be able to take out that high, and we may simply be just getting up to the higher area of where price was up here before collapsing down. Okay. I think this moved down when the Bank of England said that they were stopping the bond purchasing. So, the market will be very much watching that level there, that high before the movement back down. So just get your levels set. New Zealand yen is getting a bit consolidatory. This is the day chart. Very much like the Aussie yen, we've had that significant rejection last month. We've already traded back up inside last month, so I'm anticipating we might be moving down. And we've got this very strong rejection from last week. We're just trading within the range of last week at the moment. So like I've been doing on these other pairs, there's the higher last week to the current low of last week. I'll just drop it back to the daily. This is a lower bottom. So this is just rallying. Day trend is down. There's a number of bottoms here, I know. It's a little bit more consolidatory, but structurally it's in a downtrend from a lower bottom. It's coming up to the 62, so that's another yen pair at the 62 level of the daily range. So this could spike up to this level of broken weekly support, 82.96. Could move fractionally above to the 79 level here, 83.29, which lines up with all these rejections. If you're at last night's webinar on market liquidity, all these rejections we saw last week, let me just get rid of that fib. Not one of these candles closed above this area at 82.96, so approximately 8300 level. So quite clearly, the bigger players of the market have been absorbing all the traders who are wanting to buy, taking the other side, because nothing closed above that level 8,300 last week. So a retest of that level may well see failure for a move down. And there's a potential of a bit of a head and shoulder pattern forming there. This could be a little bit of a left shoulder on the 82.96 level. And we could be simply coming back up to retest that level, hold and fail. Okay, so there would be your left shoulder. That would be your head. I think I discussed this on Tuesday. So this area here, 82.74 to 82.96 to the 8,300 level, we could well see that hold for a move down. Okay, New Zealand dollar, very small ranges at the moment when you look at the day chart. It is, excuse me a moment. All right, so let's go to the monthly chart. We are getting close to this low, the COVID low. This line here is just the most recent day level of support. So it's a bit overextended. However, trend is clearly down. Weekly, we heavy rejection, had a week up, rejected down. We've traded below daily support. Yes, we're positive at the moment for the week. Like I was just been doing on many of these pairs. Are we simply just retracing up inside the candle at the moment of last week before moving down? I mean, we could be bottoming out down here, but the high time frame trends, even the day chart trend at the moment, everything's down, just back to the daily. That day trend's quite clearly down. Are we just rallying up? Can we come up to this area here? This could be considered a left shoulder here to put in a right shoulder for the next decline. And we're just coming up to put in a lower top for a further decline. At the moment, all I'm really seeing is that the market's not willing to commit any more to the downside until the news comes out. All right. So that the shoulder area is just here. That's set to 57.50. That lines up nicely with the 79% level. So that would be an excellent level to watch over the next 24 hours. All right, may never get there. Once the news comes out, we may just be dropping, and we may only just come up and challenge this high here and fail, 56.56. Okay. All right, dollar Canadian. Got a few lines in here, but the significant level here is at monthly top. 137.92. We're trading at 137.95, so we're pretty much there. Is that level going to hold for a left shoulder, head, right shoulder on the bigger picture? Still trying to move up beyond that level. It has put in potentially a higher bottom here on the weekly. We're trading into this weekly resistance here. All right, weekly supports here. So we're to this week, we're pretty much bound by weekly support to weekly resistance and contending with monthly resistance. All right, so nothing's shouting out quite yet that we can't continue up. Day chart is showing a little bit more consolidation. It is struggling. You can see the highs here forming on the day chart. It is struggling, although we have put in a higher high. It is obviously, nobody's wanting to push that high at the moment, so we know what the US dollar is coming out. All right, of course, we could end up with a double top forming here. If the US dollar data is negative, all right, this could then obviously maybe want to start to form a double top here to move down. You'll just have to monitor that. Okay. All right, dollar yen. Anybody brave enough to keep buying this dollar yen at such high levels? At the moment, the next significant major monthly top we're heading towards, it's not that far away now. So you could definitely monitor 147.68. What happens up at 147.68? We're about 100 pips away. I know some of you are a bit concerned about the Bank of Japan coming in and further coming in and pushing it, strengthening the yen. So are we going to get any more intervention? Last intervention was up, I think, at the 95 level. We're at the 146.77 level. So are we going to get more intervention, or are we just going to get verbiage to say we might be coming out to intervene? Sometimes just talking about it is enough to not get traders to keep buying. But clear uptrend there. Next key level to watch is most definitely 147.68. What does price start to do around that level? All right, weekly chart, just clear uptrend at the moment. We've moved above this weekly top that we formed, 145.89. All right, we are seeing, there's a clear uptrend there. If the uptrend is just going to continue, then we might see a pullback to that weekly broken resistance at 145.89. Any pullback, watch that level to be support for a move up if you're prepared to keep on buying the dollar yen. All right. All right, let's have a look at gold, which is a very strong topic at the moment. I did a video today just discussing the idea. I don't know whether it's going to run this way, but we do have this major potential double top here. We are starting to maybe want to. We're pretty much at the moment, 1676. Trading right now at 1676. Is 1676 going to hold as resistance now? And I want to, remain below that level now for a longer-term move down. Is this forming a double top for a significant decline? The height of the pattern projected below is down here at 1,278. So just fractionally below the 1300 level. So, can we get down there? Is that pattern going to run out to that level? At the moment, the market's pretty much sitting at 1676 as I'm talking. Weekly trends remaining down. Potentially, we haven't quite broken the lower last week yet, but we may well be getting close to wanting to and putting in a further lower top here on the weekly. All right, whatever we're seeing on the weekly is we're not seeing a change in trends. We're not seeing a higher bottom. We're not seeing a higher top forming. We're potentially seeing another lower top forming. And as I move it to the 4-hour chart, we have traded back up inside last month's candle, couldn't take out the high and failed at the 79% level. All right, so have we now had the last of the rally above 1676? For most of the week this week now, we have been testing 1676. Let's go to the daily. We've been testing 1676 last 2 days. This is the 3rd day in a row now. We've been closing below it for 3 days. We're testing it right now. So difficult to trade waiting for the news because, of course, we don't know what's going to happen. But if we can move nicely away from 1676 even and then see an opportunity to trade in line with that potential double top, there might be a long-term move down. All right. Slide asking me, is it head and shoulders? It's not a very great one. This area is a little bit higher to the left shoulder. So it's not a great one. It's more consolidatory, I think. It'd be nice if we just got a clear move down from that level now. Break below last week's low. Then we get a rally, and that area becomes resistance away from this area. you know, for a nice clean setup. I mean, of course, you can be trading here right now. Stop goes up the chart, and you're just anticipating that the news is going to bring further US dollar strength that we've been seeing in the market for months. Same status quo, and that might work out well, might work out effectively with the pattern that we're seeing. You just have to look at what you're risking if you want to do that. If you're only risking like 0.5% on your account for the potential of, you know, whatever gain that you think you can target, if you think the risk to reward is okay, even though the news is coming out, you know, you need to make that personal decision yourself. So we're definitely at the most favored level to sell at, which is just a question of we've got this risk averse news potentially coming out. So you just need to work out yourself, how do you manage the risk in the face of these news items coming out? Of course, all these news items coming out at the moment, especially with the US, that looks at inflation data, and then we got interest rate data. It's very difficult if you're not already in a trade ahead to, you know, go kind of take a trade now when you're waiting for these news items to come out. So you just have to work out how you're going to balance the risk to reward as you're seeing these levels on the chart. I mean, this is a great level. What are we going to, you know, we'll just have to wait and see what happens. If I was looking at this myself, just what is happening generally, it's just telling me that we're just conforming to the downtrend at the moment. Big question is 1676 now holding as resistance? Okay. All right. Now, Olive May, you're asking me about the CAD yen. Let me just read what you said. All right, let me get to the chart and have a look. So I'm not entirely sure where you got your fib retracement at the moment. Can you type in the price points? Whilst I'm waiting for your price points, we've got this major level of monthly resistance here that we're holding at, testing right now. Are we going to hold and fail, or big rejection last month? Are we holding and failing, or are we moving down? This weekly structure is still up in terms of this could be a high bottom to move up and through. Key level low is 106.50. Is that going to hold? Do have a higher bottom on the daily here. Are we going to move through to a higher top? Again, still the key level to watch is the 106.50 level. And Leaf May, you haven't got back to me. I'm not quite sure where your fib's drawn from. So I know you're asking me a question about the 61.8 extension level, but I'm not quite sure where you had your fib drawn. So if you want to tell me, I can put it on the chart. At the moment, as I look at the 4-hour chart, even though this is structurally up, if we have once more failed at 106.50, there's the potential to draw a fib from that high to low to look at this price action as maybe a rally back. You know, we failed. This is then a rally for a further decline. So at the moment, we haven't quite met the 62% level. But we are, yesterday we did fail there at the 106.50 level. Today we can't get there. So is this a failure? Is this rallying back up inside that minor range there to fail at 62? Or it could come up to retest 106.50 for moving down. All right, so you're saying you're gonna check and get back to me. So I'll just wait for your numbers on your fib. But at the moment, we could be having a further failure there at the 106.50 level yesterday for another movement back down. All right, so I'm just waiting for Slav, for Olufemi to let me know where he had his fib so I can help him out with his question. All right, while we're waiting, if there's anything else, if there are any other instruments that you want me to have a look at, market's a bit slower today. So I'm really just looking at levels because waiting for the news to come out a little bit later in the day. I'm going to have a look at the euro dollar while I'm waiting for any more comments back. Now I'll look at the euro again. All right, so euro yen is testing the 62 level. What's that pound yen doing? Pound yen still moving up. Pound dollar is still trying to move up too. All right, Leif, I'm still waiting for your figures. If you get back to me, I'll look at the chart again. If you don't, then you'll just miss out. Slav, you're asking me, while all the major pairs are having a slight rebound, but we hold a negative bias for the move down. MACD on the 4-hour time frame is showing a move up. Well, it's just, you know, when you look at lower time frames in MACD, it's just reacting to price. A 4-hour MACD cross-up doesn't change the higher time frame trends. It's just showing you what's happening on the 4-hour chart. So I never look at just a cross on the 4-hour chart. Like if we look at, go to my other charts, say in the euro dollar, for example, I don't know what pair you're looking at, but 4-hour chart, okay, MACD is crossing up. But when you're potentially having a day up on the day chart, the MACD will be crossing up. It's just a momentum indicator telling it the momentum's moving to the upside at the moment. But this is historical. It's not fortune telling. It's always based on historical price action. So yeah, we may well be seeing this on all the pairs at the moment because all the pairs are having a bit of a 4-hour uptrend, having 1 or 2 days maybe up. Edwin, you're asking me how do I do order blocks on the day time frame? Well, I'm going to go through that next Wednesday, but seeing as you're asking, we can have a quick lesson on order blocks. As I've covered all the pairs already today, we can have a quick look at that, but I will go through it in next week. Give me a pair and I'll do it on that pair. All right, well, pound yen, okay. All right, I'll do the pound yen in a moment. So Leif may just giving me his levels for his Canadian yen, so I'll have a quick review of that. Saying Tuesday 11.10 high. So we're Thursday, Tuesday 11.10 high to 105.10. So did you have it drawn like so? And then your question was, all right, so yeah, we moved up to the 160, almost to the 162 level before moving back down. What could have happened? What do you mean what could have happened? Clearly, traders in the market are clearly driving price up to retest 106.50. And of that range that you're drawing, which is a range on the 4-hour chart, Clearly, this is just an extension of the 4-hour trend here, moving up to retest 106.50. Does retracement go beyond 110? Did you have the retracement? Was that how you had the fib drawn? So you're telling me, you asked me, does retracement go beyond 100%? No, it doesn't. So if you were thinking, well, I'm not quite sure whether I got the fib drawn in the right way at the moment. I'm pretty sure I have. If we're using those 2 points, the only way I could draw it would, well, I'd actually draw it the opposite way. Be drawing it that way. So that if we were looking at, say, the 1-hour chart, you'd have a movement down here, and then we've moved up to the 162 extension. These numbers above 0 aren't retracements, they're extension levels. You drew the fib from high to low. All right, if you're drawing the fib from high to low, you're drawing it the wrong way around, because you should have drawn it the way. Drawing from high to low, we're not using these extensions up here. You need to be drawing it so that if price put in a low here, okay, and then moves up to that high. So you should be drawing it from low to high. Then theoretically you're measuring the retracement. This is the retracement section of the tool. So you're looking for maybe a 62% retracement, a 79% retracement. These numbers above 0 are the extension levels that you use to take profits at. These are not retracement levels above here. These are extension levels for taking profits at. Okay. Hopefully that helps you. So yeah, these levels up here are not retracement levels. You thought it was in a downtrend? Well, if you thought it was in a downtrend, what, on the 4-hour chart? You thought it was in a downtrend on the 4-hour chart. So you had this structure going this way for a rally back up, then you need to draw your fib from that high to that low. The high that you gave me, pretty sure was that high, 106.10.3. You got 106.10.7. So the high that you gave me was this high. You should have been drawing from that high to that low if you were looking for a rally back up to finish within the retracements for a move down. Okay. Hopefully that helps you. All right. All right, just getting on to order blocks on the pound yen. Let's have a look. What I'll do is I will open up a new chart. I'm going to go through this next Wednesday, so, but I've got a few minutes where we can do a little bit on it now. All right. I don't need Mike D on here, so I'll take it off. So my understanding of order blocks is you can have an order block. An order block's formed once you get an impulsive move away. All right, so if I was looking at order blocks, we had quite a nice move away from this area, from this high down. So you draw your order block from the last up candle before the move down. So unless you get an inside candle. So I would be going from that candle low to that candle high, and there would be an order block there. And because the red candle was fractionally higher, you could move it up to the final high. So that would be the order block there. All right, that's my understanding of how you draw an order block. So that would be the most immediate order block to the upside. All right. There is another order block that we're actually, this area here has contended with. When we came up to this top before this decline down here, there's an order block here. Again, I could take it up to the high. I'm using the last positive candle before the decline, but we did make a fresh high up there. So there'd be an order block just there, and you can see that we came to trade at that order block before we went down. All right. So that's the highest level order block at the moment. It's been what they call mitigated a little bit. It has been traded into. All right. You could potentially use the final candle here if you really wanted to, and you can use the high and low of the candle. You could move it up to the body of the candle as well. So we haven't quite touched that area, but in its truest sense, that is the order block just there to the upside. All right. And Edwin, does that help you? So I'm going to go through it in its entirety on Wednesday, but what you're looking for is where does price impulsively move away from? The order blocks, what I call a bearish order block, is the last positive candle, the last up candle before we move down and away. And the bullish order block is the last bearish candle before we move up. All right, so potentially we have an order block here, which is quite large, which you could refine down to the body of the candle, which would take it down to there. All right, if we moved back down, it's quite a large one, that, so I don't know how worthwhile it is using that massive order block, but potentially that's how you would draw an order block. You could actually refine it just to the body, which would get you to there. All right, we do have an inside candle here. So often when you get an inside candle, you can refine the order block just to the inside candle. So that area just there. All right, that's my understanding of how you draw order blocks. So Adrian asked me, so with order blocks, it's an area where potentially it's going to be support or resistance. Now you can refine them down to lower time frames, like a 4-hour chart. The 4-hour chart, let's just use that top one up here. If I went to a 4-hour chart, the most current order block on the 4-hour chart would be the last up candlestick before a move down. We had quite an impulsive move just here. So that candle just there. Now, of course, that actual order block has been traded at because we moved down, and see how it became resistance there from movement down. So that could still act as an area of resistance. However, it has already been traded at before. So I hope that helps. That's pretty much how I look at order blocks. It's an area that could act as support or resistance. Sometimes the lower level of the block acts exactly as resistance, as you can see it quite there. Sometimes it will trade inside. Okay. All right. And Alif may want me to explain it again on your CAD yen. So in this area here, you said to me that you are looking at it as a downtrend. The high that you gave me was this high here. All right. But drawing the fib, you wouldn't draw a fib from that high. If you thought this was in a downtrend, you'd be drawing from that high to that low, because price was rallying back up here within that high to low range. So you draw your fib from that high to that low within that 4-hour downtrend as price is coming back up. You use that high to that low. All right, that's how you would draw it. That's the correct way to draw it. You were telling me that you had it drawn like so, which is incorrect at the time. It would be from there to there. All right. You drew it on the 15-minute for daily range. Well, however you drew it, it wasn't right because that would be how you would draw it. I remember in the webinar when I was doing it, I drew the fib and I drew it from there to there. And I said the 79% level here could act as resistance for a movement back down, which we can see that it did. All right. So I definitely drew it from there to there. Now, if you're drawing it on the 15-minute chart, there are multiple smaller ranges here. There's a movement up here, a pullback here, a movement up there, a pullback there. And drawing on the 15-minute chart, you said you drew it from here to there. Well, first of all, if you were drawing it from there to look at, say, this range, you'd have to draw it not from high to low, you'd go from low to high. Because the 79% fib level should be at the bottom of the tool, not at the top. All right. So you would draw it from low to high like so. All right. So all I can say is that was the 4-hour top up here. That was the 4-hour low down here. Correct way to have drawn it at the time was from that high. Let me just redraw it. Should have been from there to there. Looking for a rally back up to 79% level maybe. Okay. All right, hope that helps you. I think you had the fib drawn upside down and wasn't quite using the correct range, I don't think. I'm not entirely sure what your trading philosophy was at the time when you were using that high to that low. But if I was looking at the 4-hour chart, looking at the general trend and the ranges, it should have been from that high to that low. Okay. All right, if you want to review, if you want to send me a chart, or if you want to bring it up again next week, that's fine. But without entirely knowing what you were trying to do at the time, I know where you're drawing it from, the way you drew it, but I would say that was the incorrect way to draw it. But I'm not entirely sure what you were trying to achieve and what your methodology of how to trade was at the time. All right, everybody, any final questions? While I'm waiting for a final question, then next week, what's coming up next week? We'll have live market analysis on Tuesday. We'll be going through order blocks. I've got a presentation on that you can take away, even though I've touched on it today. And I'm just going to take you through a very simple approach of my understanding of how you draw order blocks and how you can use them as support or resistance to help you look at things in terms of why would price be stopping in a certain area. I just showed you there on the pound yen. And then on Thursday, as normal, we'll be going through live market analysis. So all the webinars are starting next week, Tuesday, Wednesday, Thursday, 8 p.m. New South Wales time. Just come over and register. All right. And where was that chart that I just had open? I may have closed it now. Pound yen there. So I was saying there's an order block there that's been traded into. There's an order block here that's already been used. I'll take from that candle low up to that high. we're kind of in the same area. So ultimately, let me get rid of that order block for a moment. When we came up to this top up here, we were in this order block over here. All right, in an actual fact, well, this order block here has been taken out. There was an order block here. Sometimes order blocks don't hold because I can see an order block over there. This is what I was saying yesterday when we were talking about smart money concepts, that they can get quite fanatical about the fact that they should work all the time, but there's an order block there from back in time, which didn't hold because you can see that price came up and traded through the order block and try to trade above resistance there. So sometimes order blocks will be the thing that holds as resistance. Other times it's resistance that holds as resistance. Okay, so that's why I was saying yesterday that it's good to understand these concepts, but don't think that everything works 100% of the time all the time. It's good to know about it and understand how other traders are trading, what tools they're using. So sometimes you'll see that, yes, an area that you can class as an order block is holding as resistance. I can see in more recent times that this order block here has held the market. All right, but another one of my tools would maybe tell me the same thing. All right, another one of my tools would be using a fib. And what we see is that whilst price did trade above the 79% level, maybe, you know, we've above it, but now we're maybe starting to fail at it. There's numerous technical tools that you can use. Some work exactly at a given time, other times they don't. If I had a toss up between, say, using order blocks or support and resistance, I would go with support and resistance all the time. I find that support and resistance works closer to 90% of the time rather than order blocks, but I'm sure somebody that likes to use order blocks will give you a different impression. All right, so it's what you see, you can see on the charts and what you see working well for you within the framework of how you're trading. But it's good to understand how other people are creating their trading framework, so that, you know, what you don't know could be risk to you, but what you do know can often help you lessen the risk when you're trading in the market. Okay. All right, so we'll go through order blocks next Wednesday in more detail, give you some more examples of the current market and some of the past market. All right, everybody, thanks very much. Bigger news event 10:30 p.m. So get ready for that. I'm going to be up beyond 10:30 tonight to see where the price moves to a level that I'm watching, and we'll see what the market brings. So thanks very much, everybody, for your questions. Thanks for your attendance this week. Have a great weekend wherever you are. Stay safe. I look forward to seeing you next time. Thanks, everybody.